Okay, welcome guys to the weekend video review for full subscribers. Right, I want to get this video out early. It's now almost noon on Friday, the 22nd, and I want to get this video out early because I just will not get a chance this weekend. I'll be surrounded by kids, and they won't allow me any peace or quiet. So, all right, this is Eurodollar. Let's get into it and see what might be in store for next week, going by the particular wave count that I'm working on right now. So I've been talking about this contracting triangle here in a possible wave 4 pink. It's extended, but I don't think there's any other useful way to view this this corrective, this slide sideways, as anything other than a contracting triangle. We had a decline in wave A, new high in wave B, which overlapping and just overlapping and indecisive. And I think the best way to count it is as a B wave, as B waves are just that. You know, they're annoying as well. They're hard to count, hard to track, and they're damn annoying. So I call that a B wave. With a decline into wave C, which was a slight new high, or slight, say, higher low above wave A. We had a corrective advance in wave D, which I think can be best counted in 3 waves. Now this sharp decline here, unless you get into the minutia of the internal decline itself, this is a half-hour chart, so you know, unless you go down into the 5-minute chart or something, maybe you'll see 3 waves there, but it's a plunge, a direct plunge, but it's still finished at a higher low, which is best counted, you know, in terms of that contracting triangle. So we'll call that wave E to finish the larger wave 4, which would suggest a rally in wave 5. And off that low, we have gotten, so far, we can see a rally. So, you know, we haven't broke out to a high above the wave D high yet, but I think that the most useful way to count this rise off the low is as a beginning of wave 5 in pink here, which will close out wave 5 in brown. So for next week, we should see a continuation of this 5-wave pattern to the upside. I mean, we have a target of 122 here that was given by the Fibonacci extension, and a rise next week in Eurodollar, or a decline in the dollar, does kind of fit with a larger pattern in the dollar, which is playing out across the cross rates right now. I don't follow dollar index, so I probably should, but I'm sure you'll probably see that there as well. You'll probably see a decline in dollar index next week. Okay, so I've marked, you know, the rise off low in possible wave 4 as a beginning in wave 1 gray. The US market hasn't started yet. It's only about 6 o'clock in the morning over there, so that kicks in around 2 or half 2 at my time, or at say GMT. So we could probably see a drift to the side or down in wave 2 gray this afternoon, Friday afternoon, and then for the early part of next week, we should see a rally up into the 122 area. Obviously, we'll know more tonight with the nightly update. I'll be able to close out what today's action has kind of. I'll be able to review has it kind of shone any light on what's on the developing pattern. If we get a decline, corrective decline into a wave 2, well, then that'll probably strengthen the case for a rally next week into the target area. A-okay, I'll just get rid of all this crap, and I'll move on to pound dollar. So pound dollar, so far so good. I mean, we were looking for a rally off the wave 4 support here, and it was 131.50, and that was because of the previous 4th wave low here. We were calling for a rally off that low, and so far we've got a nice, what was that, 500-point rally to the top. The initial target was at 134, and wave 5 so far, this is wave 5 pink I'm talking about, has extended. Right now I'm showing the alternate account as the market has topped in wave 5, but no, I'm not so sure about that. It's definitely possible to count 1, 2, 3. There was a contracting triangle, and in wave 4 and 5 to finish at the high 136.50. And again, maybe that is exactly the best way to count it. For the moment, I'm not so sure about that, because I think this could this structure here could probably best count as an expanded flat, kind of a B wave rise. Excuse me there now, and I'll try and fix this up. Wave A B wave rise, and wave C into complete wave 4. I want to work on my I want to work on the accuracy of my pointer control here. But a 3-wave structure, a complete 3-wave structure with a decline, an impulsive decline in the 3rd wave to complete that larger structure. So I'm calling that wave 4, and since that low we've had a rally in a possible beginning of wave 5 gray. So what does that mean for next week? Well, first of all, I don't want to see any violation of the level there. Let's see if I can get a level on that. I don't want to see any violation of the initial move off the low there, which was at about, say, 135.06, 135.05. I don't want to see any decline into that level, because that would kind of call foul on this this structure off the low developing into a 5-wave structure. I want to see pop higher off this little correction here, and I want to see break through that target, that upper target again, 136.55. Again, ideally we'd come up to touch that upper trend line again, which is, let's see, I'll drag this in, and that upper trend line stems from joining the wave 2 to the wave 4, and projecting it off the larger extent of wave 3 there. Right now, for early next week, we're probably looking at, again, signals of a top, signs of a top appearing in another dollar cross rate, which means that the US dollar is gearing to turn higher again across the board. We've already seen that play out in dollar yen, which we'll go into right now, and it seems like dollar yen might be leading the way again, because it kind of seems to dance to its own tune, really, dollar yen. Okay, so that's a pound dollar. Possible pop higher above 136.50 again, and ideally into that trend line before turning again. The alternate already views the high as in, and the reason I'm saying that the alternate views this structure as complete already is if you watch this A equals C here, and we'll go to the 4-hour chart, you'll be able to see that what I'm counting on the larger wave structure is a wave C of a complex correction, wave C red here, which breaks out into 3 waves. So we had an A wave up, a B wave down, and now a C wave up. Now, I took the extent of wave A and projected off the B wave low, and that gave us a target of 136.50. And as you can see, the other day, we hit a high of 136.57 or thereabouts, and an impulsive decline off that high. If we don't break that high again and we turn lower in through support, well, then we will be talking about this alternate wave count and looking for a 5-wave decline and a 3-wave rally to give an Elliott wave signal off the high. But for now, I'm probably favoring this target here to be broke again. All right, let's move on to dollar yen. Now, looks like this morning we've had continuation of the correction, and just try and sort this out here. Very unprofessional of me. Okay. Like I said before, we've been tracking this rally off the low, and we've been well, I've been pretty optimistic about the fact that this could be the turn in dollar yen in the larger scale. Whether this short-term count works out or not is kind of it's beside the point, really. We've had a lovely impulsive rally off the low. Here's the 4-hour chart, and we may well have a larger correction into the 200-day moving average there. As you see, that average has now bottomed out and is starting to turn up. Now, we might be talking about a larger degree rally developing here. If we get a larger degree decline in 3 waves into the 200-day moving average and then it bounces again, we'll probably be talking about this being a wave 1 green and a wave 2 green, but it's kind of a little bit early to say just right now. For the short-term count, I think the best way to count it was wave 1 green to this high and wave 2 into the previous support there, 109.50, and then the impulse move off that again being an extension in wave 3 green. Well, we'll see how that works out. Right now on the chart, I'm seeing wave 1, 2, 1, 2, and 1, 2. And we've had a bounce this morning. A decline last night and a bounce this morning. If we get a break of the previous high again at 112.70, then we'd be talking about a rally and extending wave 3 green, which, if you can follow me, we'll be talking about wave 1, 2, and then 1, 2, 3, 4, 5 up in wave 3 green. And that's what I mean by an extending wave 3. So on the cards right now is a pretty bullish structure of a series of 3 1-2 waves to the upside. 1, 2, 1, 2, 1, 2. If we start seeing a break of support, immediate support is 1 at 11.04 there, the previous wave 2. If that support breaks today, I'll probably favor the switching around the wave count to show a larger wave 2, which is still on the cards in the alternate short-term count. So medium term dollar yen is looking pretty damn bullish. The short term, I'll have to kind of figure out how the initial kind of structure off the low will play out. For early next week, this support will be key. Obviously, a break of that support will kind of lean towards the larger kind of wave 1 green, 2 green scenario. So I'll know more tonight, obviously, as today's trade kind of closes out. Well, let's move on to the Dow. Okay, here's the Dow. I want you to ignore this little spike low here this morning, because this is a derivative that I'm looking at here. This is not the actual cash market. So today's low did not break below the previous low of wave 4 here. So we're still looking at an impulse rise in wave 1 corrective decline in wave 2, and the market is sitting at 356 or so, or 357 this morning. Right. So today is kind of an interesting day, because the short-term wave count is calling for a rally in a wave 3 of 5 of 5 of 5 of 5 of 5 to close out a very, very large bullish structure, which has extended and extended to the upside. We have an upper target. The first initial target was 22,400 or so, and that was met by this wave 1 here on yesterday, was it? Yes, Wednesday, sorry. On Wednesday high, the new all-time high Wednesday. From that high, we got a little corrective decline, a possible wave 2. Definitely looks corrective. Definitely doesn't have any impulsive intent in there. It's just a kind of like a cooling off. So today on Monday, we may well see a rally in a third wave, which will bring us even higher again, possibly another 200 or 300 points into, the high 22,500s, possibly topping 22,600. Obviously, what I'm tracking here is a 5-wave rally, 3, 4, and 5 to complete wave 5 pink, which will complete on paper the larger bullish structure. So for today, I want to see maybe I don't want to see any break of the previous wave 4 anyway, that's for sure. I want to see a flattening out as the US comes online, and I want to see a return to a kind of an upward momentum in a possible third wave of 5. So for today and possibly early next week, we're probably looking for an extension of this bullish structure and to complete a larger 5-wave structure. And the reason I'm kind of very tentative now is because we're right at the end of a very, very large impulse structure. And as you can see, this is the 4-hour chart. We're closing out a wave 5 green, of wave 5 blue, of wave 5. And if John Hausman's work is anything to go by, I'm expecting a monumental decline, and one that will go down in history books. And the way that these rallies are kind of punctuated by, we've got it punctuated by intermediate sideways declines. We've got shoulders setting up. We've got, let's see if we get to 1, 2, 3 sets of shoulders, possibly even 4 sets of shoulders. We're creating kind of a nice peak in head at the top, and then we should start to see the creation of larger shoulders to the downside. That's the pretty straightforward head and shoulders kind of view of the structure of the market. This, I'm so, let's say, I'm pretty bearish. I'm so bearish this market on the longer term that I tend to see, a closeout to these larger structures as being, signals of a very, very large decline process that is just about to begin. And I know we've been through, we're still talking about the crisis in 2008 and 2009, but I think that this next one could blow that one out of the water. We've had, obviously, the governments, the big E7, and beyond that, governments have dived in, and central banks have dived in headfirst. And whatever you might say about their actions, it did actually, let's say, save us from ourselves in a way. However, they built up a very, very large, contingent liability within that action, and there's absolutely no powder left. There's nothing left to challenge or to say stem the effects of this next oncoming bear market. And to me, in my mind, the deflationary collapse that's about to hit us is of such a magnitude that it's hard to even contemplate how we're going to deal with it. But obviously, for now, for the very short term, I'm still looking towards a new bullish high, a new all-time high in the Dow and in stocks in general. But it's not going to end well. There's just no way in the world it can. And I think I'll leave that one like that for the moment. I do want to do a kind of an overview video on what's likely to happen and what the wave structure is suggesting for our financial futures. I'll probably do that quite soon, and I don't want to send anyone away crying after it. But what I am very optimistic about is when we do hit a low, when the market does hit, when the Dow does hit 2,000 or 3,000 or 5,000 again, I want to be buying stocks, but I want to have cash left at that point as well to buy stocks. So, all right, for now, let's move on to gold. Now, last night I wrote about a larger structure that may well be taking precedence in the gold market, and I want to just talk about that for a split second. More than a split second. I don't talk about things for split seconds. All right, here is the daily count, and this is the three-wave structure that I've been working with over the last while. We got a bullish break of that down, that falling trend line there, which broke out in what I've been counting as wave 3 blue at the moment. But I think I might be leaning towards this alternate count here, and this alternate count is far more bullish than what I've been working with at the moment, because it views this new kind of trend move to the upside as an impulse structure rather than a corrective structure, first of all, and it views it as operating at a higher degree, which is 1 degree higher than the wave count that I'm working on right now, which I think would explain things a little bit better, to a higher resolution, and it's kind of the reason why I'm leaning towards it. And it counts this move off the, I think it was a 12, no, what was that low? 1100 low, say, in wave B, way back in December 16. It counts that as the beginning of a wave, a third wave up, and this third wave up could well take us to new highs. And the way that I would count that would be a kind of a wave 1, 2, 1, 2, 3. So either way, this market is still looking pretty bullish. It just depends on what degree we are actually this structure is moving in. And like I said, I may well be leaning towards this more bullish, larger degree wave count. And let's say if we get a decline, if we go down to the 4-hour chart, down here is a 4-hour chart, you can see that the market has kind of has come in has punched below the kind of 200 period moving average there. But let's say on the 200, the daily chart, we have this declining trend line here connecting previous highs. That's kind of indicating a shoulder effect, let's say. If we get a decline into this trend line again and a bullish move off that, you'd be talking about, say, 1260 or so. If we get a move into 1260, we break out of this this alternate wave count, or sorry, this operating wave count, and we move to the alternate wave count, which is shown here. That will be wave 1, or actually that might even be wave 1 in red. We'll see. We'll move on to that. If we get, first of all, we have our support at 1274, which I'm looking at. We've had a bounce this morning. If we come above the 200 period moving average again, we'll be back into kind of operating at this wave count. But like I said, I'm definitely on the verge of flipping counts here to the more bullish structure. That decision will be made much easier if we break 1274, which is a kind of, I know, a contradicting way to look at things, but the structure would lean that way, or would lend itself to that interpretation at that point. So on the short term for this week and for the end of this week, for Friday and for the rest of, sorry, the beginning of next week, let's see if we get a pop higher. Obviously, I've been pointing out 1315 being that kind of previous fourth wave high here, creating a kind of an inverted shoulder. If we get a bullish break of that, we'll continue with the current wave count, and we'll see how that kind of plays out. But gold is definitely still it's still screaming buy to me at the moment in general. Okay, let's move on to crude, and this will be the first time I do a weekly review of crude. So let's get into the 4-hour chart first. All right, let's pull that into view here. So in crude, I'm looking at a contracting triangle in a wave 4. And we could talk about this. Wave 4 is what I'm looking for the market to close out. So a contracting triangle again, I think, is the best way to kind of view this this declining range in price in general. I think the best way to view a declining range in price is as a contracting triangle. But we can see that we had an A wave up, 3 waves down in B, 3 waves in C, 3 waves in D, and now we're working on a 3-wave structure in E. So let's move into, get rid of that. Let's move into the 4-hour chart. That's the daily chart. So what you know what we're looking at is a contracting triangle and a completion in wave 4. So the 4-hour chart, you can see this. This is the final move up. So that's what we'll be concentrating in the 4-hour chart. So you can see here, this is an ABC pattern to the upside, and it seems to be tracing out a kind of a complex 3, 3, and 3 wave structure. That might change, but for the moment, I think that's probably the best way to look at it. So we have an A, B, and C in blue. The upper trend lines here seem to be pointing at about 152.50, maybe 153. We have a larger trend line here. First, we have the contracting triangle trend line, which points to about 152.50, maybe, to top out. Maybe below that, maybe just 152. The parallel trend channel here in blue labels points to a higher high at around 153.50 maybe, and then the lower trend channel here is what we're going to concentrate here on. That's the lower trend channel there, and that seems to point to a possible high at 152 also. And that kind of, this lower degree parallel trend channel seems to corroborate the declining the declining trend line of the contracting triangle, which is up here on the daily chart. This declining trend line, which again points to a completion about 152. If you see there on the by the crosshairs, about 152 to complete and hit that that trend line again. Let's go down to the 30-minute chart. What I love about Elliott Wave is the way you can work at different resolutions within the same market. I can connect action within the daily chart down to action within the 30-minute chart, which is, you just can't do it anywhere else. I like that depth of resolution in Elliott Wave. Maybe it's because I'm a kind of a visual type of person, but I do like that resolution. Right. What I've been talking about last night is maybe a further decline in wave C. That still looks like it's on the cards given the action overnight and this morning. We have this larger trend channel. Say we have wave C. This trend channel on the 30-minute chart. We're talking about an A, B, and a C wave up. Let's get that drawn. So A, B, and C. And wave C should trace out 5 waves. And what I've been talking about is wave 1, 2, 3. A possible complex triple combination here in wave 4. So wave 3 to 4, and then a pop higher up into the 152 area for wave 5. That'd be wave 5 gray. Right now, I'm looking at this lower trend channel here. We had a wave A, a 3-wave movement in wave A, a 3-wave movement in wave B, and a possible 3-wave movement underway in wave C. Again, 49.60 looks like a good area to complete this correction. The only way this will change is if we get a break of resistance there at the wave B high, 51. 51. I think it's 12 or so. 51.15 maybe. Or was it 51.11? 51.11 I think was the wave B high on the cash market. So if we get a break of this wave B high, we'll be talking about a move up to the upper trend lines here. But for now, I think a 3-wave decline in wave C is likely the best way to look at it. So that would be for the rest of Friday, possible declines below into the $49 area, and for next week, early next week, a bottoming at 49.50 or something, and then we should see higher lows build in wave 5 gray. So that has been an extensive video, which I never intend to do them so long, but they always end up working out long. I probably should just accept it at this stage. So we'll see most of you tonight for a Friday night update. We'll close out the week, and if you're watching this during the weekend, have a great weekend, and we'll see you Monday evening. Have a good one, guys. Bye-bye.